Good morning, ladies and gentlemen. Welcome to the show. I'm glad to have you guys here. Now, we're going to be doing an update on Deutsche Bank, and we're also going to do an update on the United Kingdom and their efforts to leave the European Union. And so we're going to get this started, and let's open up the charts right here, and let's take a look first at Deutsche Bank and this merger between Deutsche Bank and Commerzbank. Now, if you guys been following this, you probably already know that Deutsche Bank is a very, very slowly failing institution. But it's happening very, very, very slowly. To tell you the truth, the economic collapse may happen first before Deutsche Bank collapses. But eventually they're going to collapse. So this is a last move, last-ditch effort to try to stave off what's the eventuality for Deutsche Bank is by merging it with Commerzbank. And what I gather from this article is that first off, this deal is going to plan a lot of job cuts. It says the merger talks between Deutsche Bank and Commerzbank are rousing many employees these days. According to boss Frank Bursk, a merger could cost at least 30,000 jobs of the 135,000 jobs of the bank. So that's about probably, 26, 27%, something like that. I'm just figuring it off the top of my head, but it's a rather large chunk of the workforce of these two banks will be gone, right? And so, of course, these people are not happy about this. It says, no wonder that during the warning strikes of the ongoing bargaining rounds, many posters with slogans appearing like "Fusion, no thanks," or "Bloodbath amongst the workforce." Both sides of the top managers, as well as for the unions, this merger, they say, is only going to pay off if tens of thousands of jobs are really canceled. So this is the big thing about the people who are merging the bank. They only want the merger to actually happen if they're going to get rid of tens of thousands of jobs. And actually, these merger talks are going to be going on until the end of this month, and we're going to find out more. That's what I get. It says by the end of April. It says a preliminary decision on whether it comes to the merger or not should fall by the end of April. And here it says negotiating circles still put the chances for the big banks' marriage, in other words, the merger, at 50-50. The negotiating circles right now. That doesn't sound like this is really all that on. It's a move in desperation, first off. They're saying to themselves, hey, you know what? This is only going to be worth our while if we cut 30,000 jobs. And also, they're still only giving it a 50-50 chance of happening, even still, you know. So this is very tentative. This may not even happen, this merger. But what's really going to happen, ultimately, is Deutsche Bank's going down. It's just taking a long time to get there, but eventually Deutsche Bank's going down. There's no coming back for Deutsche. I can't see any coming back from Deutsche Bank. The only way you could have a comeback for Deutsche Bank is if interest rates went really high, maybe, or something, you know, something strange like that. But if that were to happen, you know, the whole system would be in massive jeopardy anyway, because we've got such unstructured, so much leverage in the system, so much debt, that you cannot service that debt if interest rates go too high. It just becomes impossible. In the end, what happened is well, anyway, let's move on to the United Kingdom. The United Kingdom is in this thing where they are going to have to make concessions to the European Union, and they're talking about giving this thing called a flexible, it's some sort of a flexible deal where they're going to have a whole year, you know, they're going to put it off for a year. Of course, the United Kingdom will have to take place in the European elections next month. It says the United Kingdom is increasingly likely to be a contest in the European elections next month. Now, do they really want to elect over 70 representatives from the United Kingdom, where a good chunk of those representatives are probably going to be ones who are cheesed off? They're going to be cheesed off. And they've already said that they're going to be as difficult as possible to the EU. So, if the EU decides to go with this, and I think they're going to tell you the truth, I think they're going to go with this 1-year extension. It says, May, let's see, Prime Minister of England, or the European Union, or the United Kingdom, I should say, is set to visit Paris and Berlin on Tuesday in a bid to convince Emmanuel Macron and Angela Merkel to agree to her request for an extension. She's going to be promising everything. It says May is expected to give a promise of sincere cooperation that the United Kingdom would abide by EU rules. You know, now, those elected representatives in this next election are going to be part of this Council of the European Union, and they're going to say, they say that they're going to be as difficult as possible. Well, May is going to go over there and meet with Angela Merkel and Emmanuel Macron and try to console them and tell them that this promise of sincere cooperation, well, she doesn't control these other people that are going to be elected in. And will they actually show this sincere cooperation when they have already said that they're going to try to be as difficult as possible? Okay? That's what they've said they're going to do, try to be as difficult as possible. Now, she's going to go over there and she's going to promise them sincere cooperation. Well, the two things don't go together in reality, but maybe it'll work. Maybe her getting down on her knees and promising Angela Merkel and Emmanuel Macron, and I think the one she really has to try to convince is Emmanuel Macron, that that the United Kingdom is going to sincerely cooperate. Now, you have to understand something else is going on here as well. There's peer pressure. There's an awful lot of peer pressure for them to extend this Article 50 and move it off into the future. Because politicians, they hate to confront an issue directly head-on. They always like to extend things into the future with the hopes that some other politician will have to deal with it after they're gone. This is basically the way they're I guess when it really comes down to it, politicians are mostly lawyers, but they're also cowards at the same time. They're very cowardly. Anyway, so they're going to push it off into the future as far as they can and try to let somebody else deal with the problem that they created in the first place. This is typical. Anyway, let's move on with the markets today. Let's take a look at silver today. And you know, we got a little bit of good news for silver. It's up 4 cents. And it's at $15.26. Well, that's better than $14 and whatever. You know, we'll take it. It's a little bit on the higher side of its range right now, and that's good. Stay up there, silver. Keep going. You can go up. We don't mind. We don't mind. Except for you guys that want to buy more, a lot more. You're like, oh, stay down, stay down, stay down. Anyway, let's take a look at gold. Gold's at $13.04 today and looking good. It's up $7. That's nice, you know. Nice to see that. Let's take a look at Bitcoin today. And what we're looking at in Bitcoin is 51.44. We're looking at a little, it's at 51. It's holding strong, you know, but you have to understand something. Bitcoin's going to go along, I might as well call it flatlining. It's going to continue to flatline, basically bounce up and down in this flat line like these lower prices for a while before it finally starts to heat up again. And as it bounces along in these lower prices, say anywhere between $3,000 and $6,000, anywhere in that range. It's just going to continue to bounce along in that range for a while. Sometimes it's going to go up toward the high side of that range, up towards $6,000, and then other times it's going to fall back down toward $3,000. And the people that are in the Bitcoin community are all like, "Whoa!" They're crazy, they get extremely discouraged when the price drops off, and they get extremely enthusiastic when the price goes back up again. But it's going to stay in this range until it's ready to move. I can't tell you how long. If I could tell you how long that time period is going to be, how long it's going to stay in this range before it gets ready to move, I'd be a genius. But I can't tell you. I wish I could, but I can't. But it's going to stay in this range range bound in this area until it finally takes off into the next bull market. And I know you guys are all anxious for that bull market, and you see it go up to 51.44, and you think we're in the bull market. We're not yet. Not yet. It hasn't broken out really yet, out of the bear market yet. You know, we're just flopping along in these, I'll call it bottom bouncing. You know, we're just kind of flopping along down there. Anyway, let's take a look at cryptocurrency market capitalizations. $180.3 billion. Bitcoin dominance 50.9%. And it's a mixed bag with the coins. Some of them are up a little bit, some of them are down a little bit, but there's not a lot of movement. We're seeing Ethereum at 177.92, XRP at 35 cents, Litecoin at 87.89, Bitcoin Cash is at $301.30, EOS is at $5.54, Binance Coin's 18.52, Stellar is at 12.6 cents, Cardano is at 8 cents, 8.6 cents, and, well, Tron is just over 3 cents. Anyway, let's move on to the Dow Jones Industrial Average. Let's see, it's not quite open yet, but it was down 83.97 points yesterday, and, you know, the Dow is kind of moving moving up with oil. You know, the two charts look very similar, except the Dow's moved up a little bit more than oil has. It's at 26,341, and today, you know, there's probably a little bit of nervousness going on about what's going to happen with Brexit. That's probably part of why we went down 83.97% yesterday, and we might have a little bit of a down day today too, you know, because of nervousness over what's going to happen with Brexit. Now, I'll tell you what I'm starting to think is going to happen. Because of all this peer pressure on Emmanuel Macron and on Angela Merkel to not allow Britain to have a what they call a hard Brexit or a no-deal Brexit. There's so much peer pressure on them that they'll have the Prime Minister of England there practically begging, you know, oh yes, we will comply with all your regulations. We will. But she's speaking for herself. She's not speaking for the people that are going to get elected in. And they've said that they're going to be as obstructive as possible. They're going to cause all the trouble that they can possibly cause. But they're not going to hear any of that from the Prime Minister. That's the real truth of what's going on. But they're not going to hear that. They're only going to hear conciliatory words from her that the UK will do this and do that. And they might, after a little while, say, well, reluctantly, Emmanuel Macron might say, well, yeah, okay, we'll extend you this year-long delay, you know. But I'm going to tell you what. The problems that year-long delay is going to create is ultimately the worst choice that they can make for the world's economy. And I think that's the road that they're going to take. Now, I could be wrong about this. They might go ahead and just say, okay, we're not going to have 70 members on the European Union's Parliament that are not going to go along with policy, which would represent about 10%. And I mean, they could block an awful lot of stuff if they're going to try to be as resistant as possible. They could say, well, we don't want that. We don't want that, you know. We're just going to go ahead and not give you any extension. That's what could happen. And the markets have not priced that in. So we will have a market shock if that happens. And at this stage of the game, I'm not sure which way it's going to go, but I kind of tend to think that they're going to go for this year-long thing, is this extending it out for a year, because that's what politicians always do, is kick the can, and that's the easiest option, and it avoids an immediate problem. That's what they generally do, and so that's why my way of thinking is that that's what they're going to do. But we're going to find out tomorrow, guys, and I'm going to tell you what, this is extremely, extremely important to the markets. If it goes sour, if they vote to go ahead and not give an extension to the United Kingdom, then we could see an immediate and swift market reaction tomorrow. So now let's take a look at oil today. Oil is $64.19, and we see a slow, steady increase. It started when the stock market was going up, and it's been a slow, steady increase, and there's no reason to think that this increase won't continue, because things in motion like this tend to stay in motion like this, and we could see oil go up like to $70. It continues on. It's not far away now at this point, Now let's take a look at U.S. Treasuries today, and the yield curve inversion continues. It's back to the yield curve inversion. We're looking at yields dropping, a significant drop on the 30-year. It's at 2.90, and we're looking at drops on all the yields across the board except for the 3-month and 6-month. They're remaining unchanged, so that's pushing us toward the yield curve inversion. All of the markers today are pushing us toward a yield curve inversion, a bigger yield curve inversion than we already have, because it has never extended out to the 30-year yet. And I'm telling you what, if the 30-year yields continue to drop, and we continue to see unchanged on the 3-month, 6-month, 1 month only a marginal movement, we could actually see the 30-year invert if this gets bad enough. Let's take a look at the U.S. dollar index today. The dollar's falling today, 96.89, and this is part of the reason why we see the strength in gold today, is because of the falling dollar. An awful lot of the dollar's strength has been from quantitative tightening, and now these programs are being wound down at this point. And so we're going to see the opposite of that, dollar weakness. And the dollar really didn't get all that strong considering how much emphasis they put into raising interest rates and also into the programs of removing $50 billion worth of liquidity a month from the system. They did that for a long time. The dollar really didn't move up that much. Now we're going to see the opposite of that when they reverse these programs. How much will the dollar go down? There's a big question mark, and we're going to see, because that's what's happening right now. Listen, thank you guys for listening. Like and subscribe, and we'll catch you on the next show. Bye-bye, guys.